who is not supposed to pay their loans. And I just want to ask this question. Do you know that you or your guarantors are not legally required to pay loans in some certain circumstances? And so we are going to break down on this. What are these unique situations where you or your guarantors are not supposed to pay their loan? So the first situation is severe illness, or if maybe you are disabled. So assuming you took this loan when you're okay and you've been paying your loan so well, and right now you're in a situation whereby you are severely ill, or due to maybe an accident, you are now disabled and you are not in a position to pay your loan. In this specific scenario, you are supposed first to have all the required medication documents so that you can present it to the financial institution that loaned you. And in this way, your loan will be waived. Why? Because these loans are insured, and that is why I always tell you. First of all, make sure you read the requirements that are written in your loan agreement before you just proceed and sign. Because if you take a loan that is not insured, then you must pay even in your bed, even when you are bedridden. But if you take a loan that is insured and it reaches a point whereby you are so sick, you are bedridden, you are disabled because of, let's say, an accident, then you are not legally required to continue paying your loan because that specific loan has been insured against that. Then in other situation is a death of the borrower. So if in case, let's say, there is somebody who took a loan of, let's say, 2 million, they only managed to pay 500,000, then they die. I've encountered scenarios where the family members of the dead person, or rather the deceased, are usually very afraid because they're like, okay, how will we now be able to sustain this financial burden of repaying this specific loan? If you're guarantors of a deceased person that had an existing loan, you are not in any way legally required to continue paying that loan. What you need to do is you need to collect the documentation that is required. That is the burial permit, the death certificate, present it to this specific financial institution, and they will be able to relieve you off from that loan. Why? Because that specific loan has been insured. So if you love yourself and if you love your family, no one knows what will happen tomorrow. Maybe today I'm here, tomorrow I'm dead. Kindly, and you must take that loan. Kindly ensure you go through the requirements. Ensure that each and everything you're taking or the loan that you're taking is insured before you proceed in taking it, okay? So the guarantors, if you have somebody who is dead, you are not in any way legally required to continue paying that loan. As long as you have the right documentation, you will be relieved off from that loan. And if there is any collateral that was taken when this loan was being taken, you are supposed to be given this loan, as long as you have confirmed that you are actually the next of kin by providing, I think, a letter of administration. So a letter of administration confirming that you are the next, you are the next of kin in case there was no will. And even they will go further to ask you, okay, go and provide, let's say, a letter from a local administrator, let's say a chief within your area. So once the chief within your area confirms that indeed you are the next of kin, let's say in this specific family, you can take the documents, death certificate, burial certificate to this specific financial institutions, and all the collateral will be released to you, but you will not be expected to pay anything to them. Now, why guarantors are not liable after death? Loan insurance covers that loan. And this is something which most financial institutions will not tell you, because they still want to inflict that stress to the people who are remaining. Pay that loan, when deep down they know that they have been insured. So they are going to earn from both the payments you're giving them and also the payments they are being insured on. So the best and the most important thing is for you to go and tell that bank that I know this is what is going on. The person who has this loan is either bedridden, either disabled, he's not in a position to continue paying this loan, and number two, he's dead. So you have to release the collateral that you took from him so that we may be able to now sort this loan out and close it. And if you do that, I think they'll be able to understand you. And in fact, they'll be able even to just relieve you of that loan or stress. Then legal protections for guarantors. Yes, guarantors, you are legally protected in case there is a death, that has occurred, or rather a disability, or rather the person who took this loan is incapable of paying because they are bedridden, you are legally protected. So you just have to understand the dynamics of this thing. Let no company come and bully you to submission because you don't have this knowledge with you. And even when somebody adds you as a guarantor, it is your responsibility to first ask them, have you gone through the terms and conditions of that specific loan that you want to take? Because the moment you don't dig in and you're just like, sign me up, when this person dies and that loan is not insured, my friend, you will have to pay this company back. So ensure you also confirm before you are added as a guarantor, you read through the terms and conditions before proceeding. Then documentation is very key. If you are a guarantor of a specific loan, or if you are a family, basically, and somebody took a loan and the collateral was your home, it is your responsibility to have the documents that are required. So if that person is bedridden, if that person is sick, disabled because of an accident, you are supposed to provide the required medical forms to the loan facilitator. Or rather, if the person is dead, then you must have the burial permit, the death certificate, present it to these people, and they will be able to close that loan. Now, what borrowers and families should do in such a situation? Now, imagine somebody is dead. I know there is a lot of things that goes on from the moment you hear he's now passed on. What are we going to do? There are several lenders who are knocking on your door. We need you to pay us. Okay, there is this other situation. Somebody's in an accident. He's disabled. He's bedridden. He's sick. What are you supposed to do? The first thing you're supposed to do is have those right documentation. If you have the documentations right, you are good to go. The next thing you're supposed to understand is understand the terms and conditions under that loan. As I have told you, ensure you only work with, I'm usually against taking loans unless it is going to help you build wealth. But if it is a must to take this loan, ensure you take a loan that has already been insured by an insurance company for your own protection and peace of mind. Okay? Then, and when you ensure that this loan has been insured, it will even put the guarantors in a much better position should such eventualities happen. Now, there's those several misconceptions that are there within Kenya, and I'm glad we're having this conversation because I want to enlighten as many people as possible. The first misconception is assuming, let's say you are in a family of, let's say, 6, the father dies. It automatically, the misconception will be, he has died, he had a loan of 5 million, we need to think about how we are going to pay it. No, you're not supposed to pay it. You're only supposed to collect the medication, and even you're not supposed to allow the lenders to come and harass you in the comfort of your home, or rather to come claiming that we are repossessing this against the loan your father took. As long as you have the right documentation, they are not supposed to even, they are supposed to close that account. They're supposed to arrest that loan. They're supposed to now pick it up with the insurance company as far as this specific loan is concerned. Guarantors always have to pay is another misconception. No, you don't have to pay. In fact, you are, in case of the death of the borrower, disability, or bedridden due to sickness, you are not in any way legally required to pay that loan. As long as you have the right documentation, you present it to the loan facility, to the loan company, and that means that account will be closed and the insurance will now be able to sort it out. The lender can seize property after death. In fact, this is a very big misconception. If there is somebody who has a loan and is dead, people start panicking. Oh, we are going to lose this house. You're going to lose this property. Why? Because they're coming to be repossessed. No, the lender has no right to come and seize the property against the loan that was taken by the deceased. You have the right documentation. You have to tell them, first of all, allow us to grieve. Once you grieve, you present this documentation to them, and they release any collateral that they had against the deceased because they pick it up now with the insurance company. So when loans still need to be paid, because in some instances, whether the person has died or not, you must pay. Whether the person is sick, bedridden or not, you must pay. In such situations, number one, if the loan was not insured. If the loan was not insured, unfortunately, you will have to pay that loan. If the loan was not insured, you will have to pay that loan, or rather you'll have to risk losing any collateral that was attached to that specific loan when they come now to repossess. Another thing is fraudulent loans. So if maybe the borrower was not honest enough when giving out these details, then the guarantors will still be held liable, and even the family risks the loss of property attached to this specific loan. So ensure that you're very honest even with your partners. Ensure that you read the terms and conditions of the loan that you want to take, okay? Because failure to understand whether this loan has been insured or not, you face the risk of losing property, you face the risk of putting your guarantors into financial distress, because they will now be forced to stand up and pay this specific loan. With that said and done, kindly thank you so much for sticking to the end of this video. Remember to like and subscribe, support me, share, and I'll be very grateful. Have a good day.